Good morning, everyone. I'll wait just for a moment for everybody to get situated properly, but welcome to Pharr Trade Trends 2021. This is our second of the year. Today we'll be looking at a couple of things. We'll be looking at the annual data from last year a little bit. We'll be looking at the first quarter of this year, and we'll try to project a little bit into the future and see where things are going. We're going to also tell a very important story about the role of energy trade in Pharr's trade, particularly this year, but it's been growing for the last several years. My name is Ken Roberts. A number of you know me, but some of you don't. I'm a guy who just loves data. I love calculations. I love statistics. So with that, I write a column 5 times a month for Forbes on international trade. I serve 2 terms on the Federal Reserve's Trade and Transportation Advisory Board, 2 3-year terms. On our website, which you'll see during this presentation, ustradenumbers.com, we upload 10 million data points every month, updated every month, including pages for the Pharr International Bridge. That page is also available on the Bridge's website as well. We'll talk about that in a minute. We do Trade Matters videos. Pharr is a sponsor of that as well. We do annual trade publications, including one for Pharr. We've done at 20 markets around the country. So we do a lot with trade. I also speak around the country, or I did speak around the country until last year about trade, and this year we'll be doing more webinars. We've done webinars in Pennsylvania, Virginia, obviously here in Florida where I live. I'm in Miami, Texas, throughout Texas, out in California. We've done a number of them around the country. This event would not be possible without the Pharr International Bridge's support. They not only sponsor this event, but also the publication, which you'll see in a minute, the Trade Matters videos we do, and the content syndication, putting our data on the Pharr International Bridge website. So they do a terrific job for the trade community in and around Pharr, both on the north side and south side of the bridge. I'd like to welcome Commissioner Romero Caballero, as well as the bridge director, Luis Bazan, and his team, which includes Fred Bowen, Freddie Flores, Vanessa Guzman, and Cleo Salinas. We'd also like to thank our supporting sponsors today, and that's the Mid-Valley Custom Broker and Forwarders Association, the National Custom Broker and Forwarders Association of America, and the North American Strategy for Competitiveness. Today, a little bit later, I'll be joined by Dustin Meyer. He's with the American Petroleum Institute, and as I already hinted, we're going to be talking a little bit about the energy story with Pharr because it's a really important piece of Pharr's story. If at any point today you have a question, there's a little box down below where you can just pop that question into the question queue and we'll try to get to it. I see the chat queue is already active, so that's great. Feel free to use that as well. So where are we going to start? We're going to start with figuring out what you know about trade and get sort of some of your opinions on a trade, okay? So I'm going to ask 3 questions of you. I should tell you a couple of things. One is that these answers are anonymous, okay? So don't worry about that. 2, all the data you will see throughout this presentation is based on US Census Bureau data, okay? So the first question, compared to the United States as a whole, how did Pharr total trade do in the first quarter? And that's the total of exports and imports. Outperform, underperform, or performed about the same? And I'll give you another 10 seconds or so to drop your answer in there. So the first quarter of this year, by the way, I should mention the first quarter of this year is the most recent data available. It's January through March. That's the discussion we'll have on a good bit of today. We'll talk about what's likely to happen in the second quarter as well. So let's see how we did here. I'm going to share those results for you. 2/3 of you said outperformed, about a quarter, about 15%, 17% each said underperformed and performed about the same. And I should tell you that the answers will come about during the presentation. I'm not going to give you the answers now, but we'll show you those shortly. So here's the second question. This one's going to be about exports. And here's that question. Which of these 3 exports was Pharr's most valuable in the first quarter of this year? Was it computer chips? Was it natural gas and other petroleum gases? Was it motor vehicle parts? Or was it strawberries and other berries? And again, I'll just give you a few seconds to answer these. And I see people are still joining us. So for those of you who are joining a little bit late, we just started and we're just doing some opinion polling, and you're welcome to join in on that. Okay, and again, these are anonymous, so we will share those results with you. 75% say that's natural gas and other petroleum gases, and a couple said motor vehicle parts, 25% there. So let's go to the third question here, and this one will be on imports. And that question is, 5 produce imports ranked among Pharr's top 15 imports in the first quarter. Strawberries and other berries, avocados, tomatoes, peppers and squash, and lemons and other citrus. For how many of these 5 did Pharr rank first nationally? And there's about 460, 470 different airports, seaports, and border crossings around the country, by the way. And I'll give you just a few seconds to answer that. Okay, and I'm going to share those results with you. We had one person said that in none of those categories. About half of you said 3, and about 4 in 10 almost said all 5. And again, I will share those results with you during the presentation as they come up naturally in the conversation. So let's start with a trade overview for 2020, okay? This is the publication that's going to be arriving in Pharr within the next couple of days. It's going to be available at a lot of places for you to get a free copy. It's both in English and in Spanish, 112 pages, lots of incredible information, again, sponsored by the city of Pharr and the Pharr International Bridge, but just really an incredible amount of information in there. It'll be available at a lot of places, and I think Tatiana is my director of events. She's going to be in the chat room there. She'll put in there some of the locations where you can find it, but it's libraries, Chamber of Commerce, and also at the bridge, of course, itself. In addition to that publication, we will have this I don't want to cover my face. This publication, there's 2 of them, one in English and one in Spanish. It's in a pamphlet form. It's fits in your jacket pocket or your purse, so it's easier to transport. They supported both of those publications. So in that publication, what you'll find is a 2-page spread on total exports. This looks at the top 20 exports for 2020 and shows which ones were up and which ones are down. So that blue horizontal line in the middle there is 0. So anything below that blue horizontal line is decreased in value in 2020. Anything above it increased. So the total of exports for the year was just over $102 billion. If you look at the last 9 years, Pharr's exports topped 10 billion each of those years. So in the last 9 years, that's 102 billion in the last 9 years. For the 3 years prior to 2020, Pharr set a record for exports. Okay, so the decrease in 2020 hurts, but it came on top of 3 record years. So that big circle you see sort of in the middle, that's a reddish purple, reddish brown sort of color. That's the natural gas category. And it was down about 12% last year. And that sounds not so great, but this is what you have to consider. The value between 2017 and 2019 doubled. Okay, so it has been on a tear, been growing very, very fast. And again, we'll get to that shortly. So what else is going on the export side? Well, we know what happened during the pandemic. A lot of us went home to work. A lot of us stopped driving our cars. We stopped taking trips on planes. Life changed last year. And so that had an impact on the automotive industry. And a lot of those exports you see then on the right-hand side of the page that are on the decrease side are going to be some of those categories. Things like insulated wire and cable, electronic ignition equipment, motor vehicle parts, computer chips, all those things are going to be on the right side. At the very bottom of the page, what you see is that number 35% sort of in the middle. What that's telling you is if you look at all of Pharr's trade, 35% is an export, and as you'll see on the next page here, 65% is going to be an import. So this is the imports, top 20 imports, and that 100 billion figure that you saw on the export side took 9 years to reach, took 5 years on the import side, because for the last 5 years, Pharr's imports have topped $20 billion. So again, even though they were down 8.55%, and that number's in the middle of the page there, down 8.55% in 2020, for the 4 years prior, it had been record after record after record after record. So it was a pause in that for sure. So what went up and what went down? So let's think about how our lives changed last year. So again, we went home. So we had a lot of needs for things at home, whether it's setting up an office or sort of looking at some of those things around the house that have been kind of needing to be repaired for a while. You just hadn't gotten to them. So there's a lot of home repair and office equipment that had to be moved in the house. So number one, furniture imports went up significantly in Pharr, but as did a number of other things. And think about how we also lived our lives. We didn't go out to restaurants. Hotels didn't need food nearly as much. So suddenly the food supply had to shift and go into our homes. So what we saw was that tomatoes went up, peppers and squash went up, strawberries and other berries went up, avocados, lemons and limes, citrus, those two categories decreased a little bit. But the correct answer to that question, that third poll question, was how many categories does Pharr rank number one in? It ranks number one for 3 of them, and that is peppers and squash, strawberries, berries, and strawberries, raspberries, avocados, and then citrus, the lemon lime category. Those are the 3 it ranks number one for. So 3 out of the 5. So let's look then at the whole year. And this slide will show you from April is on the left, closest to me, and all the way to March of this year, which is the most recent data. So it shows a 12-month period. And on the surface, it looks kind of like a good news chart, right? Things are heading the right direction. They're going up. That's what you want to see, right? But let's see what's really happened here. So in the next few slides, we're going to look at the first quarter of 2021 and what happened in the first quarter of 2021, okay? So here's the first one. This is comparing the US to Pharr, as well as Port Laredo, Eagle Pass, and Brownsville. So 3 border crossings close to you guys in Pharr. So this is looking at 2021 trade and how does it compare to 2020 and 2019. So 2020 is the blue bar and 2019 is the gray bar. And what you can see there is that Pharr outperformed. And so that's going to be the answer to your, that was the first question, I guess. Pharr outperformed the U.S. average. So the U.S. average is up a little bit compared to 2019, which is the more important year. 2019 is the more important year because it was a quote unquote normal year. 2020, you better hope we're coming back from 2020, right? So, so Pharr way outperformed, up basically 20% over both years in the first quarter. So very good news. Eagle Pass and Brownsville also did very well compared to 2019 and 2020. Port Laredo, not quite as well. So let's break it down then. Let's look at exports first. And this is exports. Look at the growth in Pharr's exports when compared to 2019. And again, remember what I told you about natural gas, okay? We're going to get to that a little bit more detail in a minute, but this is where natural gas comes into play. So better than 50% increase in the exports from Pharr in the first quarter of 2021 compared to 2019, and close to 50% compared to last year. So it even outperformed 2019 even more. So really impressive. And Eagle Pass and Brownsville did quite well as well. And theirs is a natural gas story too, to some extent. Port Laredo did moderately well. And as you can see, the US on the export side is relatively flat. So what do we know about the imports? Imports in the United States are a somewhat different story because there's so much Asian influence on the import side that it has an impact on the numbers. So you can see here, the Texas ports generally didn't do quite as well as the US average, excuse me. But Port Laredo's up pretty strong. Pharr is doing fine. It's up 2% over 2019 and up about 7-8% on 2020. So nothing to complain about, but not quite as strong as it was on the export side. But now let's look at what happened last year during the pandemic. So this is the second quarter. We haven't gotten the second quarter data for 2021 yet. This is the second quarter of 2020 versus the second quarter of 2019, okay? And so here you can really see this is where the pandemic had its real impact, okay? So US trade across the top, you can see that those decreases really hit hard on the export side more than the import side. You can see as bad as those numbers might look for Pharr there, down 29, almost 30% in total trade, and about the same on exports and imports, pretty balanced there. If you look at those other ports, even more trouble. Those numbers are even more significant. So as bad as those numbers may sound like for Pharr, they were worse at some of the other neighboring ports. So that, in fact, is, I think, on some level, the good news. And that's where we're going to do a little bit of a look forward. So we look back at 2020, we look at the first quarter of 2021. And if you look forward, if you look at this chart again, now you see the story a little differently. What you see on the left-hand side is you see that big dip. that occurred in Pharr and around the country. This is Pharr, obviously, but and you can see how trade bounced back and continued to bounce back and is bouncing back pretty strong this year. Again, if you have any questions, now's a great time to ask them, to drop them into the question queue. I'm happy to try to answer those questions as we get them. If there are no questions, that's fine too, and we will jump forward to our sort of panel discussion. Today I have joining us Dustin Meyer, as I alluded to previously. He's the Vice President of Natural Gas Markets for the American Petroleum Institute, API. He's got vast experience in the industry before coming to the API, but really knows natural gas, in everything about natural gas. We've had some terrific conversations leading up to this discussion today. His goal is to talk about the benefits to natural gas domestically and internationally, including in emerging markets. As those of you in Texas, and that's most of you on the call today, know well, or Texas or Mexico, know well, a big piece of that energy production for natural gas is centered in Texas with the hydraulic fracturing. He went to Yale University, where he received a master's degree. Before I ask Dustin to join us, I'm going to give you the answer to that other poll question that I haven't answered yet, but I think you have a good sense of it. So look at these two numbers you see here. So this is from our website. Okay, this is from ustradenumbers.com, and you can also see it at the Pharr Bridge site. And I believe we have that URL in the chat room. If it's not there, Tatiana can put it for us and put it in there for us. But if you look at this chart, this is this is 2020. You can see the little button at the bottom that's gray. It says 2020. This looks at the exports from Pharr, essentially all to Mexico, in 2020. And that percentage for natural gas was 22%, which is not too shabby, right? But let's fast forward to year to date and let's see what happens. 46% of the value. So all that natural gas is going via pipeline, okay? It's literally natural gas. There could be LNG, there could be propane, there could be butane. It could be, in various forms, these petroleum gases. But I can tell you, virtually all of this is going to be natural gas via pipeline that's going to Mexico. And what happened that made it jump so fast? You may remember there was the big freeze in Texas in February. So in that month, that 1 month alone, 25% of the total value of all natural gas exports leaving the entire country, United States, left via the pipelines that cross closest to Pharr. So Pharr is credited with that. If I don't have any other questions, I'm going to ask Dustin to join me now, and we'll have a discussion. And I hope we'll have some people ask us some good questions there. But Dustin, welcome here. No, I forgot to mention one very important thing about Dustin. Maybe the most important thing. His work is certainly important, but in either tomorrow or Monday, we think, but any day now, he's going to become a proud father for the first time. So
that's right.
It'll be a baby girl. So congratulations in advance on that. And that big change in your life. It will be as significant a change in your life as fracking has been in Texas, maybe even more so.
Yeah, that's right. Thank you, Ken. Delighted to be with you all today. Great.
So let's start off. Maybe there's a lot to discuss here, and we've got a little bit of time, but not a ton of time. But we got a little bit of time to talk about it. Let's step back and talk about the pipelines that service Mexico from Texas. How many are there? Where are they, and so forth?
Yeah, so this has been a really exciting trend over the last decade or so. We now have about 17 operational natural gas pipelines that cross the border from Texas into Mexico. There's always been a few. The US-Mexico natural gas trade has always existed, but what we've seen over the last decade is just a dramatic surge, both in terms of the capacity and the actual volumes that we're seeing cross the border. I think if you go back even to 2015 or so, the average kind of around where you'd expect the flows to be would be around 2 BCF per day or so. Just last week or last month, I believe.
Maybe you should tell us what 2 BCF even means.
Yeah, sorry.
I have no idea what that means.
So that's the metric by which we measure the volume of natural gas and the flow of natural gas. So what that stands for is billion cubic feet per day. So that's the rate of natural gas that we're sending across the border. So again, you go back 10 years ago or so, it was probably around 1 or 2 billion cubic feet per day. Now it's up around, it's north of 7 billion cubic feet per day. In context, if Mexico were a state in the United States, it would be the second largest consumer of US natural gas. Only Texas consumes more US natural gas than Mexico does. Texas, for what it's worth, consumes about on average 10 BCF per day. So this is a huge trade relationship now that has developed over natural gas, and it's almost entirely driven by the unconventional resource revolution in the United States, namely hydraulic fracturing in shale reservoirs.
Right. And so that's what really, that was the game changer, wasn't it?
Yes, yeah, exactly. Because what that did is that brought prices down. And North America is somewhat unique. You know, when you talk about oil prices, oil is a global commodity. You can have a price in the US, but it's connected to the price in the North Sea and in the Middle East. It's a classic global commodity. Right. Natural gas is still a regional commodity. So you have prices for the better part of North America, for all of the United States, and including Canada and to a certain degree Mexico. It's obviously all connected. When the shale revolution really got going, what happened is you saw the average kind of price for natural gas be cut, you know, by more than half. We used to talk about natural gas being around the order of $8 per million British thermal unit, which is another metric that we use in pricing. Now it's down to, you know, $2.50. So that's what motivated the rapid expansion of this pipeline capacity into Mexico, is because Mexico has surging natural gas demand, and now they recognize that they can get very cheap natural gas from the United States.
And so what happened in February there? So that, because I think, as I understand it, in our previous conversation, that price has been enormously stable. That's what your point was, comparing it to oil. What happened in February?
Yeah. So February, and for those of you who went through it, you probably can well remember what a perfect storm and confluence of unfortunate events that represented. But what you had is, because of the unprecedented cold, you had a record pull on natural gas, not just in Texas, but through all of the Great Plains. And so when you have that much of a new pull on natural gas, you're talking about natural gas demand in the state of Texas, which again is very, very large. You know, it tripled, it almost quadrupled over the span of 36 hours. When you're pulling that much on supply, prices are going to go up. And so you had these Texas prices, which, you know, usually are very stable, as you said, Ken. They average around $2.50 or even cheaper, especially when you get out into West Texas. Those prices over the span of 5 days hovered, you know, almost near $100 per MMBTU, which is totally unprecedented, you know, even higher in some instances, because there was just so much need for natural gas. So when you have such a multiple on price, that's obviously going to impact the statistics in terms of the value of the flows that were going from the US to Mexico. Okay.
And so if you remember in that chart I showed earlier, I said that Pharr's exports had risen about 50%. Pharr's exports of natural gas this year alone are up better than 200%. So they're a big piece of what's happening there. And a big piece of that is that freeze adjusted price, if you want to call it that.
Exactly.
So I'm sitting here in Pharr or across the bridge on the other side in Reynosa, and I'm trying to figure out, so why should I care about natural gas? Because I don't get to put it on my truck.
Right.
Put it in my warehouse. I don't get to, you know, I don't get to charge anybody anything for it.
Right.
Why should I care?
Yeah, well, the production of natural gas in Texas especially is particularly important to the economy. I mean, broader oil and gas production, obviously, in many ways is the historical backbone of the Texas economy. What's somewhat unique about Texas production is that a lot of the natural gas is produced along with crude oil. And so that means that the producers, especially if you get into West Texas or in the Eagle Ford Basin as well, they desperately need an outlet outlet for this natural gas, because if they can't get the natural gas out, then they can't get the oil out. And so the overall prospects for oil and gas production in Texas diminish significantly if there isn't this takeaway capacity for the natural gas into Mexico. So it's a big part of the Texas economy. But what's really interesting is the extremely positive impact it's had on Mexico's economy as well. So Mexico has surging natural gas demand. You may be wondering what's driving that. A lot of it comes from the power sector. Power sector demand for electricity is increasing rapidly, and a lot of that is being driven by surging air conditioning demand. There's a lot of citizens in Mexico's middle class who are getting access to air conditioning for the first time. That drives a big uptake in electricity demand, and a lot of that is being met by U.S. natural gas. In many instances, Mexico produces their own natural gas, but not a lot of it. It peaked in 2009. Right now, dry gas production in Mexico is only about 2 BCF per day, whereas again, they import over 7 BCF per day of US gas. So nearly all of the gas demand in Mexico is now met by US natural gas. That's it's cleaning up the power sector. Historically, a lot of Mexican power generation came from diesel or residual fuel oil, which is a lot dirtier than both in terms of GHG emissions and also local air pollutants than what natural gas is. But natural gas, because it can be used for so many things, it's also really critical to industrial demand, to manufacturing demand. And I read a statistic, I don't know how you really determine this, but there's over 800 manufacturing facilities in Mexico that rely on US natural gas. So again, this is a very good thing for Texas. This is a very good thing for Mexico. And I also think it's a good thing for consumers, because the natural gas that they are using is a lot cheaper than what it has been for the last 30 years or so. And it's very good for the environment as well. You're reducing GHG emissions by displacing dirtier fuels, and you're significantly reducing those local air pollutants that that when you traditionally think about pollution, you're thinking about sulfur dioxide and nitrous oxide and particulate matter. All of those more or less are eliminated by switching to natural gas as well.
Yeah, and so right now they're considering, they are in the process of moving forward with doubling the size of the bridge in Pharr. And this conversation, I would think, would make them feel a little bit better, because if there's that much natural gas being sent into Mexico, and it's lowering the cost of that power generation, giving access to, in addition to air conditioning, a host of other uses it's now much more efficient. It means that all the manufacturing that occurs there can be more efficient. But it also means the business and the consumers in Mexico, in theory, will be sort of lifted up, because in theory, their power bills would go down. Are there any, there's some risk to that?
Well, so it's a good question, because one of the things, so as the United States has become, we are now the world's leading oil producer. We are now the world's leading natural gas producer. We are energy secure.
And pause and just say that one more time, because, those of us who've got a few years on the tires like I do, that's just unimaginable, isn't it?
Yeah.
It's unimaginable that this could be the case.
Yes, it's been as dramatic a reversal as the global energy system has ever seen. It really is amazing what has happened. We are now the world's leading producer of crude oil. We are the world's leading producer of natural gas. Every presidential administration, going all the way back to Richard Nixon, one of their priorities has been for the U.S. to become energy independent, or at least energy secure. We have now achieved that goal, and it's entirely driven by the shale hydraulic fracturing revolution. So one of the consequences of that is not only are we no longer importing a lot of oil or importing a lot of natural gas, we're starting to export it. And so when the conversation turned about 5-6 years ago around, hey, we're now going to be a major exporter of natural gas, there was a lot of concern about, well, wait a minute, if we're exporting this natural gas to foreign countries, is that not going to raise prices here in the United States and negatively impact our consumers. There was a lot of concern over that. But now, because we've been exporting so much gas for so long, we export not just pipeline gas to Mexico, but we also are now the world's third largest LNG, which is liquefied natural gas exporter, which primarily comes out of the Gulf Coast. We are exporting a tremendous amount of natural gas. And you look what's happened to US natural gas prices. While exports have surged, gas prices are just dead flat. So there has been no negative impact in terms of domestic consumers. And again, especially for Texas, because so much of the production is crude oil driven, you had a lot of pricing scenarios for natural gas where, remember last year, April, it was such a weird time when it famously drew headlines all over the world that crude oil prices went to negative, right? They ended at negative $37. How can a commodity be negatively priced? In the natural gas.
And I went to the gas pump that day and they still made me pay for the gas.
Yeah,
I was hoping they were going to give me some money, but it didn't work out that way. Yeah.
I know, it's funny that it doesn't work. But in the natural gas space, we're actually somewhat used to this, especially in Texas, in West Texas. There are pricing hubs over there where prices for natural gas have routinely been negative for the better part of the last 5 years because there's so much surplus natural gas that they need to develop new takeaway capacity for. And so again, this is really just such a win-win, a no-brainer, where this isn't going to negatively impact US consumers, but it's definitely going to positively impact consumers in Mexico.
Yeah, and I guess in Mexico, then similar to the movement you sometimes hear here in the United States, is AMLO, the president, is interested in producing more natural gas there.
Yeah.
There are probably some challenges to that, but that would certainly be upsetting to the opportunity here. But I would think there's some challenges to that, no?
Yeah, there's a lot of challenges, and unfortunately, this win-win situation that I just kind of laid out is a little bit threatened right now. For folks who have been following Mexico politics, you'll recall that going all the way back to 2013, the president back then had instituted a major set of energy reforms that was designed to allow outside investment into the Mexico energy sector to incentivize and spur more development and more production. Now, under the AMLO presidency, one of his key priorities is to effectively roll that back. And he really wants the state-owned enterprises like CFE, which is the national utility, Senegas, which is the national natural gas pipeline operator, and most notably Pemex, which is the national oil company, to really be the leader in doing this. And he's really kind of discouraging that outside investment. So yes, that is AMLO's plan, is to use Pemex to dramatically increase domestic natural gas production, which would, if achieved, limit the amount of pipeline flows coming from the United States. Unfortunately, I find the targets that the current administration has to be notably unrealistic. As I said, domestic gas production in Mexico peaked in 2009. It's gone down significantly since then. If Pemex is going to really get back into the production game in a major way, their efforts would almost certainly be focused on crude oil because there's considered more profitable, financial upside there. So I think that despite the AMLO administration's unfortunate actions and unfortunate messaging, I think that the actual supply and demand fundamentals for U.S.-Mexico natural gas trade are going to remain very, very strong for at least for the foreseeable future.
And my understanding is in Mexico, they don't have any way to store that natural gas. So we provide it and they use it. Is that correct?
Yes, that is a very good point and often forgotten. In Mexico, the United States, most Europe is like this as well, but the United States is blessed to have a tremendous amount of natural gas storage, not just in tanks, but more notably in underground reservoirs. And that allows us to meet rapidly changing demand conditions quite easily. The only exception would be when you have something extreme as the February storm in Texas or something where we fell just a little bit short. Regardless, that's a major component of the overall integrity of the North American energy system, the North American natural gas system, and Mexico does not have that. So the consequences of disrupting those pipeline flows even if it's only for a couple days or for a week or something like that, the consequences can be felt immediately because Mexico just doesn't have any buffer there.
So, and what does it mean if we step back and look at sort of the big picture? What does it mean if the U.S. no longer needs to import nearly as much oil, and that has the ratio between oil exports and imports this country has shifted enormously in the last decade or so. We're still a net importer of oil compared to what we export,
Right.
but it's shifting. I mean, we provide a lot of oil to, of all places, China.
Yes.
A tremendous amount of oil goes from the Gulf ports essentially to China. And when the trade war was going on, that took a dive. They decided they would live without or find it elsewhere.
Right.
But how does this shift the geopolitical? And does it make, I think, to me, does it make Mexico a more important trade partner, a more important relationship than it might otherwise?
Yeah, I think it definitely increases the importance of the Mexico relationship. It increases the upside for the U.S. I mean, I think generally, there are so many benefits to the U.S. becoming energy secure, to us, having this profile of being effectively an energy superpower. Certainly, it means that we have more leverage geopolitically. We have more flexibility geopolitically. As a good example, I mean, not only we oftentimes focus on the relationship between OPEC and the Middle East and the United States, for example, which is very important, and we import decidedly less Middle Eastern oil today than what we did, say, 10 years ago. But, a lot of the refineries on the Gulf Coast, they weren't really even designed to import Middle Eastern crude. They were designed to import Venezuelan crude.
Yeah, it's a dirty or heavy crude, right?
Exactly. And you look at not only the environmental consequences of oil production in Venezuela, but also the political ramifications there. For us to be able to kind of step back from that situation and not be dragged into it in a negative way that negative impacts either our geopolitical interests or prices at the pump is incredibly important. I mean, even if you look right now at the amount of turmoil that's going on in the Middle East, which is very unfortunate. Obviously, Israel isn't in any way a big oil and gas producer, but generally, just conflict there generally has historically resulted in spiking prices. You really haven't seen that this year, and that's a big part of that is because the United States is such a strong supporter of oil and natural gas. So it's, the benefits are just enormous. Prices have gone down significantly. I always like to remind people, it just wasn't that long ago when the price expectations, if you would ask economists, even if you would ask people in the oil and gas sector, what do you expect the long-term next 5-year oil price to be? People would have said, $110 per barrel or something like that. Well, we've been operating in the 40 to 60 range for the better part of the last 5 years or so. That has huge consequences to consumer expenditures, to overall economic growth. So it's hard to imagine a more critical development than what we've seen with this transformation of the U.S. oil and gas industry over the last decade.
And I know it doesn't, it's not total energy use in this country, but when we talked earlier, you mentioned sort of the power generation by type of energy, where it was coming from. And could you provide that breakdown again? I thought it was pretty interesting.
Yeah. So it's interesting the way that it works. So in one thing that doesn't get mentioned a lot, right? The energy conversation right now, and perhaps justifiably, is really not so much an energy conversation, it's a climate change conversation. What often doesn't get mentioned is the fact that the United States leads the world in absolute emissions reductions over the last decade, right? We're often considered to be a laggard in terms of climate action and climate policy, but no country on earth has reduced its emissions more than the United States. And the primary mechanism by which the United States has done so is in the power sector, displacing coal, which has about 50% higher GHG emissions, with natural gas, which is and is driven purely by market forces, right? Natural gas is cheaper than coal, so power sector operators choose natural gas over coal. So it used to be, 10 years ago, natural gas, in terms of its role in the US power sector, maybe was responsible for about 17% of generation, and coal was responsible for about 45 or 50% of generation. What you see now is those have exactly flipped. natural gas is by far the largest source of electricity generation in the United States. Right now, it's at 40%. The next closest is coal and nuclear at 20%. So it is really natural gas that is leading the way in driving down emissions. And again, we also, we always talk about climate change as such in terms of pollution. But again, the local air pollution, the stuff that actually impacts your lungs right now, today, on a daily basis, that's SOx, that's NOx, that's particulate matter, that's very, very prevalent in coal-fired generation, that is almost entirely absent from natural gas-fired generation. Natural gas-fired generation, sorry, I'm belaboring this now, but there's just so many benefits associated with it. But natural gas-fired generation is also uniquely capable of tracking variable renewable energy generation from wind and solar. So it's like that is such a winning recipe for emissions reductions that the world is looking for now. And I think that because we're now exporting so much natural gas, that's a model that we can now, that's a recipe that we can now share with the world, including Mexico.
And for those of you doing math at home, I think when Dustin was giving those percentages, he got to about 80%. The piece that you didn't mention is that renewable piece, which is also probably growing somewhat as well. So growing coal is the one that's getting squeezed.
Yep.
And I think nuclear is staying more or less where it is.
Yeah.
But natural gas has grown enormously, and I think renewables is growing somewhat as well. I've got a question for you here, Dustin. You mentioned there are 17 pipelines between Texas and Mexico. If you divided the border into 3 regions, how many pipelines are in the RGV, and that's the Rio Grande Valley region, compared to central border and west border of Texas? I'm not sure how familiar you are with those 3 regions, but I guess you could say east, middle, and west, maybe.
Yeah, I believe, I don't actually know, but I think the bulk of them are in the eastern region, in this region here. I think there's probably at least 8 or 9 there, and then a few in the middle, and then a few newer ones over in West Texas. That's been kind of a more recent trend just over the last couple of years. I know the Waha to Guadalajara system, which is called the Guajalara system, that just opened up, I think, a couple of months ago. And what that was designed to do for the first time is to connect that West Texas, Permian, Odessa, Midland, that production directly with the western part of Mexico. So you're seeing a surge out of the western interconnect as well. But historically, I think the bulk of the capacity and the bulk of the flows are coming more from the eastern region.
Yeah, and I think just from the data that I look at, I would say, and again, I don't know the specific answer, but my guess would be you're pretty much on target because Pharr plays such an integral role. As I said, in February, 25% of total capacity was moving through the Pharr area, but also Brownsville, Cameron County, that area, as well as a lot of pipeline natural gas as well. So Laredo has some as well. So I think that you're probably correct in that.
Yeah. So there's a lot of offshore production that kind of connects, on the Texas Gulf Coast as well, and then that can flood down. There's probably almost no place on planet Earth where the natural gas pipeline grid is as well developed and as liquid as what the kind of eastern half of Texas is, and that now includes Mexico.
Yeah. Any other questions for Dustin before we wrap up? I hope you've enjoyed the conversation. It's an amazing story of U.S. innovation, U.S. evolution, revolution, and I think we're just beginning to understand the total impacts, because it really is. I mean, I think it was in Corpus where they had to turn around the process because they were used to importing. And they had to switch the manufacturing. Was it on gasoline? Is that what it was on? I forget.
No, it was
liquid natural gas, wasn't it?
On liquefied natural gas, and that's an amazing thing. If there are probably about 10 massive liquefied natural gas import terminals all along the Texas and Louisiana Gulf Coast that came online. These aren't projects that came online in 1975. These projects came online in like 2010, 2012. A couple of them came online and then never imported a single LNG cargo because the inflection took place that quickly. That's how fast the shale revolution is. So it's really, again, it's insofar as energy system transformations can be dramatic, this is is a dramatic one.
Yeah, and as they say, life is mainly attitude and timing, and I guess their timing was just off. But again, they showed how they could flip. You know, they
Right.
took advantage of what they saw happening, and it worked out to their advantage. Well,
Yeah.
Dustin, I want to thank you for your time today. It's to me, it's a fascinating discussion. I do think it has enormous implications, not only for the United States and Texas, but for Pharr and its trade. I think that Mexico will become an increasingly important trade partner and should become an increasingly important trade partner for the United States. Geopolitically, it's better for us in that environment. And it's not just imports from Mexico; it's going to be exports to Mexico, because if suddenly you can afford air conditioning, you can start affording many other things. And as that economy hopefully continues to grow, I know it's fits and starts and all these things, but if it does, I think it's really great for everybody. So, Dustin, thank you very much for your time, and best of luck with becoming a new dad. Father's Day is just around the corner, so your timing is good. Your wife's timing is not quite as good.
That's right.
She missed her first year by a couple of weeks, I guess, but congratulations on that, and thanks again for your time.
Thank you. Delighted to be with you. Hope to chat with you all again very soon.
Okay, so, and once again, we want to thank our corporate sponsor there, Pharr International Bridge, just terrific. We appreciate their support, as well as the Mid-Valley Custom Broker Association, National Custom Broker Association of America, and the North American Strategy for Competitiveness. If you want to be in touch with us in any way, ustradenumbers.com, you can see the page that we have for Pharr. That page is open on our website. Most other airports, seaports, and border crossings around the country are not open, but it's sponsored by the International Bridge. So that page is open on our website. And you can see it also on their website. If you go to the Pharr International Bridge website, it's updated monthly with all the top exports and top imports. You can look at year to date, current month, last annual, a lot of information. There's actually a auto-generated story there. There's that 12-month chart that I showed you, that's there as well. So a lot of great information. You can call us at our phone number, 305-441-2244. You can email me at kroberts at either worldcityweb.com or kroberts@ustradenumbers.com. And you can follow us on all sorts of social channels, which I'm sort of covering up there, and I'll get out of the way so you can maybe see them if you're lucky. But we're on LinkedIn. I'm most active on LinkedIn, but Twitter as well. And we have Facebook and Instagram as well. So I want to thank everybody for joining us today. I hope you have a great rest of the week and a great weekend, and look forward to seeing everybody soon, hopefully in person. Bye now.